Company is one of the best kept secrets in NNN investing, an A-rated specialty retailer with $14 billion in revenue, totaling 300 plus locations, and a rural lifestyle market position that has almost no direct competition. If you want investment grade credit at cap rates wider than QSR and pharmacy, Tractor Supply deserves serious consideration. Here's the full picture. Tractor Supply NNN properties trade at 5.75% to 6.5% cap rates. That's wider than AutoZone and CVS Pharmacy, despite the fact that Tractor Supply carries an A S&P rating, which is actually stronger than both of those tenants. The wider cap rates reflect the larger building size and rural market positioning rather than any credit concern. Buildings run 19,000 to 24,000 square feet on 3.5 to 5 acres, substantially larger than most small box NNN. Entry prices range from $3 million to $6 million. Lease terms are at 15 to 20 years initial with 4 5-year options and 10% rent bumps every 5 years. Here's what makes Tractor Supply unique. They are the largest rural lifestyle retailer in America, and they have essentially no direct national competition. Walmart doesn't do what Tractor Supply does. Home Depot doesn't. Amazon has limited penetration into the livestock feed, pet, equine, and farm supply categories that drive Tractor Supply's core revenue. That competitive moat is real and durable. The company has grown same-store sales consistently, driven by the growing segment of suburban and ex-urban buyers who are embracing rural lifestyles, a trend accelerated significantly by post-COVID housing patterns. And the A-high credit rating from S&P means you're getting investment-grade income certainty at cap rates that look like lower-rated tenants. Tractor Supply leases are absolute NNN with 15 to 20-year initial terms. The company pays all operating costs, including roof and structure. Rent bumps of 10% every 5 years are standard. Corporate guarantee from Tractor Supply Company, the NYSE-listed parent. The large building size means the lease commitment is significant for the tenant. Tractor Supply is not going to walk away from a purpose-built 24,000 square foot store with a 20-year lease. These buildings are custom-built with specific store configurations that make them expensive to abandon. 3 things to watch with Tractor Supply. First, the large lot size, 3.5 to 5 acres, means your land basis per deal is concentrated. If Tractor Supply ever exited a 24,000 square foot building on 4 acres in a rural market has a narrower re-leasing universe than a drugstore on a suburban corner. Understand what the property is worth vacant before you buy it occupied. Second, rural and secondary market locations may have less transaction liquidity when you want to sell. Institutional buyers who pay the tightest cap rates tend to focus on primary market assets. You may sell to a regional buyer rather than a REIT at exit. Third, e-commerce pressure on rural retail is worth monitoring. While Tractor Supply's product mix has proven relatively resistant to Amazon, it's not zero risk over a 20-year horizon. Tractor Supply NNN is one of the most underappreciated value opportunities in investment-grade net lease, A credit at cap rates that reflect market perception of rural retail rather than actual credit strength. I'm Ryan Solberg with MaxLife Commercial. If you want to evaluate Tractor Supply NNN properties in Florida, reach out. Visit maxlifedevelopment.com or call 321-586-2121.